Philip Lane is Professor of International Macroeconomics at Trinity College, Dublin. Thank you so much for joining us. Now, we were speaking to you a little bit earlier on, and you believe that actually what came out yesterday just gives a lot more clarity and visibility to the markets, that Ireland will be able to get through this.
Right, because yesterday they say we need 24 billion for the banks under an adverse stress scenario, and that is quite far inside the 35 billion allowed for in the IMF-EU deal. So relative to the kind of IMF-EU upper limit, coming in at 24 billion is a kind of a midpoint performance. In addition, if you read the details, there's quite a lot of pessimism in these forecasts, or well, not forecasts, but stress tests about the level of losses. So what yesterday is saying is, even under very quite pessimistic assumptions, the Irish government has the funding to make sure that these banks remain in business without putting the sovereign debt to ridiculous levels.
So you're saying that basically the announcement says, you say it's a midpoint, that it was better than it could have been if we had the worst case scenario. What does it mean for the future? Does it mean that it will just be much more realistic on the way that investors and markets look at Ireland and its banks?
Well, the story of the last year has been the interaction between the risk to the banks and the risk to the sovereign. So, if you like, with a high level of overcapitalisation now, the risks to the banks are much less. They will have a big capital buffer to deal with their risks. Now, I think the attention will turn back to the sovereign. The price of overcapitalisation is an increased level of public debt. And this is going to be the question. This is why the yields are high, is this level of public debt sustainable once the IMF and EU leave town in 2 or 3 years' time?
And do you think this level is sustainable?
Well, this is where, it's a wide open question, is that, the numbers from the Department of Finance last night is that the peak level of government debt after this 24 billion will be 111% of GDP in 2013. So 111 is a big number, but there's other European countries with ratios above that. And even in Irish history, we had a ratio above that in the late 1980s. So this is, number one is, where is the peak going to be? And number two is willingness to pay. And what's interesting from yesterday is, some other options, such as going after the senior bank bondholders in the remaining banks, is now off the table. So the government is essentially saying is that Philip, we can do this. Even just on the sovereign bill. Is
this a good thing? Because we've been speaking to guests here on the Move over the last couple of weeks, and half of them have said, we do need to put some kind of pressure on senior bondholders. The others saying, if we have that, it's the whole European banking system that might collapse.
Well, the resolution of the Irish system involves a high degree of cooperation from the ECB. The ECB is responsible for financial stability in Europe, and essentially I think the situation is, of course the Irish government would love to share the burden with senior bank bondholders, but the ECB has a final judgment call on that, and they are saying, well, we can do a lot for you in terms of medium-term funding. We can do a lot for you in terms of how we value sovereign debt, our sovereign debt in terms of collateral, but we're not going to permit this step. So it's a situation where again, we're part of a monetary union. This is not like countries before where the kind of rescheduling decision, the bondholder decision is just a local decision. Here, we're part of a multi-country monetary union, and so some of the traditional decisions are being taken elsewhere. They're not being taken here in Dublin.
Philip, just very quickly, how much are you concerned that we will still see a lot of pressure on bond yields?
Sure, but this is all about the sovereign now. If you like, yesterday was about drawing a line under the banks, but that just returns us to the situation with the sovereign. The situation in Portugal this week, I think, is having a spillover on the Irish situation. Yeah. Because it's all about, are these less sustainable? Will the ESM bailing in of private creditors in 2013, what does that mean for creditors today? So it all goes back to the sovereign. We've making a detour vis-a-vis the banks, and now we're back to the core issue.
Thank you. Philip Lane there.